Does the notion of financial stability seem elusive in a world of volatile markets and economic uncertainty? Could the answer lie in an ancient system of banking, one that has survived the test of time and continues to thrive in the modern world? Today, we explore the fascinating realm of Sharia banking. Picture a bank that operates not on interest, but on the principles of ethical financing and mutual risk sharing. This is the essence of Sharia banking, a system deeply entrenched in Islamic law. But how does this bank ensure its financial stability? The answer lies in a concept known as asset liability management, or ALM. Consider the case of Bank Al-Jazeera, a prominent Sharia bank in Saudi Arabia. In the wake of the 2008 financial crisis, while many traditional banks were struggling, Bank Al-Jazeera was able to maintain stability. How? By effectively managing its assets and liabilities. In traditional banking, asset liability management revolves around balancing the risks and returns of different assets and liabilities. However, in Sharia banking, it takes a slightly different approach. It focuses on managing the risks associated with the underlying assets that form the basis of the banking transactions. For instance, if a Sharia bank provides a home financing facility to a customer, it doesn't merely lend money and earn interest. Instead, it buys the property and sells it to the customer at a profit. The customer then pays the bank in installments. The bank's asset here is the property, and the liability is the money it used to buy the property. Bank Al-Jazeera, in our case study, effectively managed these assets and liabilities, ensuring they had adequate liquidity at all times. This meant having enough ready cash or easily convertible assets to meet any immediate payments or financial obligations. Moreover, they ensured that the returns from their assets were sufficient to cover their liabilities. This required a keen understanding of the market and prudent investment decisions. In conclusion, asset liability management plays a crucial role in maintaining financial stability in Sharia banking. It involves managing the risks associated with the underlying assets that form the basis of the banking transactions. Effective ALM ensures that the bank has adequate liquidity and that the returns from its assets are sufficient to cover its liabilities. By following these principles, Sharia banks like Bank Al-Jazeera can navigate the choppy waters of financial markets and maintain stability in the face of economic uncertainty. In the end, the principles of ethical financing, mutual risk sharing, and prudent asset liability management ensure that Sharia banking is not only a viable alternative to traditional banking, but also a model of financial stability in an unstable world.